morning, everybody. It's Monday, December 4th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got questions or comments, please feel free to drop those in the chat area, and we'll be happy to address those during the show. You can also reach out to us at info@agyield.com. Real quickly here, overnight markets had March corn down $0.0125 at 483.5. March soybeans were down 2 3/4 at 13.42 3/4, and March Chicago wheat was up 4 1/4 at 607. A number of export sales announcements to go through here this morning. We had 440,000 SRW to China for 23, 267,000 corn to Mexico also for 23, and 183,000 meal to the Philippines for 23. Stats Canada released some estimates, some updated production numbers, and the all wheat, corn, soybeans, and canola all came back higher than expected in the estimates. Some of them were actually sharply above the estimates. I know we'll talk about that probably a little bit later. First thing here this morning that we've been talking about is this considerable sale to China in the SRW category. We've seen a couple of announcements come through. We're getting into that million ton sales number or thereabouts, and so just want to talk about what that means here this morning. We'll kick it over to Justin.
Yeah, thanks, Dan. It was 440,000 tons of soft red wheat. Soft red wheat's a pretty small class of wheat production-wise. It's the oldest one. It's been at the Board of Trade for a long time, but production-wise, I think last year, the year before, was the lowest seeded acres we had since the Civil War. These other classes of wheat have become more dominant, mostly hard red winter wheat out of Kansas City. So it's relatively small. It's specialty, for different classes of wheat. You have different baking qualities, so you make different products that can't necessarily be exchanged with different classes of wheat. It's like soft red wheat, for example, is more like soft cookies and biscuits and things like that, versus like hard red wheat would be more like crackers, bread. So sometimes, when there's a need for a certain product, they kind of focus on one class of wheat. I don't know. I was saying before the show, I'm not sure I've ever seen such a big announcement for soft red wheat before. 440,000 is, very large for, such a small class of wheat. I think they're, like Dan said, they're pushing almost 1 million tons now of soft red wheat that China has booked. I think they've shipped about 278,000 of those tons so far. So they're taking it, they're buying it and they're taking it. What I think is interesting about it's at a time where we've made contract lows last Monday. So we're a week off the lows. We broke into business. Those are two of the big signs that, you're starting to find real value here. Wheat's been breaking for, over a year now, straight down. Funds have piled into shorts. I think Dustin's got some graphics on that, but, you've got a big fund short breaking into actual, good demand, right? So I think that's pretty important here at the same time that you've made kind of a reversal off of contract lows last week. So some encouraging things for wheat, in my opinion. At the same time, saw hard red winter wheat. It's only got about a 36-cent premium right now to Chicago wheat off the March. That's down from about $1.85 premium that we saw last summer. So, I think at least those two classes of wheat are, trying to find some value areas here to accommodate such a large fund short.
Yeah, and this is that chart you're just talking about, Justin. It's the net position of managed money funds using both futures and options. So they're not quite at their 12-month low for net short position, but they're pretty close. And this is as of Tuesday last week. So yeah, very, very short coming into it, and like you said, we're at a very low point as well on the long-term continuous. We just hit lows last week, just like for corn, we're doing that for wheat as well. So it could be a fairly interesting time to all of a sudden get all this business just to see what happens, and it could actually help grains in general, hopefully.
Yeah, we see that. Oh, go ahead, Justin.
No, yeah, absolutely, and they've, I think Ben, you brought this up. Before this is, China has been, buying a lot from Russia. Russia's been just the low cost provider of wheat, in the world for really since the invasion. Some of those probably Ukrainian wheat that they were offering to the world, but they've been relentless, worn a lot of lungs in the wheat market out, and wheat's really just been a dog for the past 18 months or so.
And as we, just along the same lines, I mean, I noticed that after Friday when they reported, funds continue to rack up short corn position, looking like it's about 212,000 contracts, roughly the largest since mid 2020. So my guess is that this is just along the lines of what we've kind of been talking about in terms of these spreads and their penchant for wanting to be shorter.
Well, look at, and I'll let some other people talk, but I mean, look what just happened to wheat. I think wheat's a good example of what that playbook is, right? You stay short it, you earn your carry until you run into business, right? So I think the job of the corn market is to find a price where you create that kind of demand that we're seeing in wheat right now, right? You got to get to a level where you're competitive. I think we're close. I think we're starting to get competitive against South American corn. But you got to start seeing some good sales and some good demand at these levels, in my opinion.
I see this morning, I was reading that the Panama Canal is now, they've got basically like higher capacity ships that are taking like liquid nat gas and petroleum are using it for reduced rates, but basically like they can't get anything through. Did you guys see that story? Pretty crazy.
I did, and I think that becomes a really important part of people that ship grain out of the PNW, because if they're here aggressively to buy our products, which we hope they are, a lot of it will have to go out of the PNW because of that reason.
Well, and that's limited capacity up there, isn't it? I mean, somebody can probably speak better to that, but my understanding is that PNW can only handle so much, right?
Absolutely, it is. But if they're here to buy it, freight rates will determine where it has to go out of and the logistics to get it there. And I saw some crazy, the cost difference if they actually have to go around South America, and it's exorbitant. And they've kind of sat on their hands here in corn specifically. So it would be great to be able to see some of that happening. And what would the result be if we do start getting some good moisture and we can open up some of those trade routes to a lot better degree. You wonder if is this them not wanting to buy, being full, or is it really just being cost prohibitive because the logistics aren't working to the degree that they should? So
yeah, logistics is interesting too, because if you start doing more business out of PNW, we've talked about this, how basis levels as you get out west are actually kind of inverted in the cash market, where there's a premium nearby and a little bit of a discount the further you wait, versus a big, steep carry that we have out here in the east. And that's logistics too, right? Smaller crops out west, and you're getting demand pull, to your point, to pull bushels to the west to PNW, whereas we have low river levels here and not a lot of export demand out of the Gulf. So kind of two different markets when you look at on the cash side of things.
And that's going to be probably exacerbated because the crops in the east were tremendous, and that's the place where they should be pulling from.
Right.
So, you wonder if that logistical aspect is kind of dampening, or at least, in my opinion, tempering right now an appetite for U.S. grains, because these are 2.5, 3 year lows in the corn market. If they're going to step up and buy, theoretically, this would be a pretty good window to start getting it done.
And forgive my ignorance, is a 10 additional days of travel destination to get to Asia. I mean, that's a big deal when you're starting to talk about hitting your, getting stuff to port and stuff like that, right? I mean,
it's just another cost, right? So when you look at your big matrix of importing corn and, these exporters, right, they have their whole matrix of shipping rates and demurrage, or how long it takes to get the corn, from port to the ship. And they've got a whole, elaborate matrix of how all those different costs factor into that, landed price in their country. That's just another factor, right? So if you add that cost, unfortunately that takes away from the bid that they can pay in the US, right? Because they have to pay that extra cost to move it. So, it actually can be slightly bearish at first because, it makes you less competitive, even though you would be competitive in a normal situation. That additional cost to Ben's point, makes it tough.
Well, and you see that it backs out of New Orleans to all the further destinations when they can't do it, and we have really low basis levels all the way up the Ohio River right now, and that's definitely something to keep an eye on, because if they feel like they can start getting it done, those bids will jump quickly, and we have plenty of corn from Cincinnati all the way down to be able to satiate those needs, and it would be a good thing for our region if we could get that done.
Yeah, I did read. I'll jump in real quick. I did read that there were talks that the Chinese Sino Grain Company did get approval to buy more corn, so that's getting talked about. I know the USDA has a goal of 23 million metric tons, so hopefully we are running into that price point where we can start moving bushels. I know the talk is it'd be more like JFM timeframe, but hopefully, yeah, they're stepping in here buying wheat, 450 corn. Maybe starts doing it too. So,
and there was some wheat that was moving in the east last week. I did get a call from a commercial sniffing around to see if there was anyone that I had who had some wheat left. So as the miller and the processor gets their fill and run through it, they're back in now. So quite a bit of wheat moved, I think, last week out of this region where a lot of the soft red wheat is grown. So.
Well, another interesting thing, not to keep going on soft red wheat, but it's just kind of an interesting story. It's, Ben, you've been in that world, but it's also rare to sell this much wheat when you're competing against commercial storage where the commercials are making a big carry to hold wheat, right? So they've had to outbid that carry to get that wheat to move. So that's pretty impressive as well, considering most of the wheat's in the, in the East, obviously. So there must have been some pretty fancy bids to get that wheat to move. Maybe they had enough. Maybe they're getting enough carry in corn now that they feel good enough about moving some wheat out to make room for corn storage. I don't know.
I think that definitely played a part in it. Storage here is full. They had a chance to probably move their wheat at levels that they would have carried to July and need to clean that up and trying to find space for the additional corn that's trickling in here at the end of harvest. So I think that definitely played a part in it.
Yeah, good problem to have as a commercial.
Yep, a real good problem.
Are guys mostly wrapped up there, Ben, out there in the East?
I would say you're down to less than 4 or 5%. It's a straggle, and it's really just been kind of held up by everyone being full and having to dig out through the processor. So it's probably not enough left to really worry about. Most of my guys were looking at being finished, towards the end of last week, early this week.
Okay, very good. Johnny, real quick, Brazilian weather. I think you were looking at that here this morning. What do you got for me?
Yeah, it looks like Justin and myself were talking, but an improved weather forecast with additional rains in the forecast. So again, models switch, but it looks like improved forecast for South America. So
very good. I know looking ahead this week, gentlemen, we're going to have USDA report on Friday. I'm sure we'll have some thoughts as we go through the week. And certainly private estimates will continue to trickle out, as the week goes on. We're back on a regular schedule of export sales on Thursday. Inspections will be today, and we'll have all that data in our evening commentary. A couple of minutes left to go here, guys. Any thoughts as we go into this week, with obviously leading up to that report on Friday?
Well, we got the first nose day pop, right? So we talked about this, kind of expecting this little pop in corn. Hopefully it carries on. Hopefully this wheat number gets wheat going and maybe gets funds to cover some shorts. And give us opportunities maybe to price in the corn a little better, right? And I know we've talked about these big carries in corn. So if you look out, you start planning on, your logistical needs in corn out forward. And I think start looking at price targets and things like that, right? Because these rallies can happen quick and they can be over quick too. So.
Yeah, I agree. I think you look at holiday markets as well, you get a little thinner participation. And the necessity to do something can really be exaggerated in the markets. We had a gold explosion overnight. It's up $50 an ounce at one point, and it's trading 12 lower. So they can come and go quickly at this time of the year.
Yeah, yeah, Bitcoin too, back up to over 40,000. Kind of interesting, right? Just seeing where the money wants to be set. You got gold rallying, cryptos rallying, stock markets kind of back up to the highs. Just interesting dynamics across the board. Big picture stuff. So
yeah, I think to add to that, and we've kind of touched on this, but you just put a bunch of growers through the ringer going into first notice day. You forced a lot of bushels to get forced to be priced or rolled. So there's people aren't too happy about that, right? So if you do get some buying come in, you do get some kind of a demand, or funds decide to cover more. You could, a lot of growers are still going to be too upset to even put orders in or even think about it right now. So that's where you should take advantage, in my opinion, and to have those price targets, because it could be thin and it could go higher than you think, just because it's got to find the people that are willing to sell it in the short run. So that's kind of why you get these big rallies, and they kind of fail a lot of times in these holiday markets, because people just aren't paying attention, or they've got in their head that they're going to revisit this in January, go to Florida, pretend that we didn't just break $2 and then revisit in January. So, that's why these things tend to happen around this time of year.
Well, and to your
stay
point,
in front of it.
To your point about the grower being maybe potentially jaded at this point and frustrated, the market's job is to find the bid and to find the offer. And they just found the bid and the delivery phase. Now there's a couple, 8 or 9 days left before the December contract fully goes off. But I think you can say that it was, in my opinion, somewhere close to where we were at to get it to stop on first notice day. And, maybe the market's job now is to go find where the offer is at. And with plenty of corn still left to be marketed, would love to see it make that effort to find out where does the grower want to engage after all of this.
Yeah, a great point. That's what's interesting about these carry markets too. And that, 450, basically 450 was kind of that number in December corn. You look at the March corn highs were they 489 and a half, right? On Friday. So that's already a 40-cent rally from where we found value on the D's corn on the low. You get March corn up to $5, that could be your range. It could be a $4.50 to $5 kind of bid offer range on volume, right? It just gets there a lot faster in these carry markets. So that's something to keep in mind. Because the problem is, right, when D's goes off, and if March is sitting in the 490s or $5 range, now you've got 50 cents of downside risk pretty quick if we need to find a buyer again. So
that's good stuff, guys. We just came into the open here real quick. March corn down 3/4 at 484. March soybeans down 4 at 1341.5. And March Chicago wheat catching a little bid here, up 8 3/4, 611.5. Appreciate everybody tuning in this morning. As always, we're streaming live on YouTube, X, and Facebook Live. Same time tomorrow, 8:15 Central Time. Look forward to seeing everybody. Have a great day.
yeah,
Thanks, Dan. Thanks, Dan.